Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the hottest stocks from today. Okay, these are some of the biggest winners, stocks that we had that were in play. And so first up we're going to take a look at Eastman Kodak. Okay, this is ticker symbol KODK. Okay, yeah, they had the big move yesterday and on their initial coin offering news. And then yesterday, this is the daily chart. It ran up to that 200-day simple moving average. That's the red line here at 761, and it hit that level and pulled back. And so we were looking for possibly it topping out at that level. But after hours yesterday, it was moving hard. It started breaking out above that level, and that was signaling that it was going to head higher. So people were jumping in after hours trading. And if you notice up here, the share price opened way up here near 1250. So there was a giant gap up open from down here. Almost if you look up here, the open was at 1250. The previous close was 680. I mean, you're talking about a monster jump open. And so as you can see, the black candle formed after the open that ran to high of day and pulled back. Once that black candle started forming, it was your signal to head to the sidelines. This big gap is an unfilled space in the chart. When the black candle starts forming, it signals the bears are in control. Now it needs to hold that 300-day simple moving average here at that is currently at 993. It needs to hold that blue line. If you see it drop below that level, then it could drop down to that 200-day moving average and fill the gap. So the top of the gap is the bottom of the low of day today, and the bottom of the gap is high of day yesterday. So a drop down to that 200-day simple moving average would fill the gap. So keep an eye on it. That we're going to see if it can hold that level. If you can stay above the 300-day simple moving average, then it could bounce off and possibly, head higher. If you look here at the weekly chart, it's going to need to break a key level to head higher. When we posted last night, I made a video showing the weekly chart, and it was showing this 100-week moving average currently at 1133. The circles are from last night's video, but as you can see, the share price went above that level, and then it pulled back and it closed below. So in order to head higher, it's going to have to close above 1133 for the week. Keep in mind, this week's candle will not set until the closing bell on Friday. If it fails to get above that level, the candles could work back in the bands. You can see here today's candle is pushing through the upper Bollinger Band at 998. And if it does pull back, that 50-week moving average down here at 849 would be the key level to hold. Notice that it was the high close from back in September. So if the candles work back in the bands, you want to see that level hold. Yeah, it has to break above 11 resistance to head higher. Okay, let's look at AMRH. Okay, this closed up 71% today. I wanted to show you this one next. It had a very strong day, up 71%. But as you can see here, the black candle formed. I should just show you the accumulation distribution. But yeah, when the black candle starts forming, the safest thing to do is head to the sidelines. I mean, this pattern forms over and over again. And the odds are, if you go out over the course of a year, and each time you see the black candle form and you head to the sidelines, you'll be glad that you did more times than not. And so that's why we call it our black candle rule. And the signal is just that the bears are signaling the bears are in control. When it ran up to high of day and it started pulling back and forming that long upper wick, that was your signal to lock in those high of day gains. I pulled back and all the way below the 200 and 300-day simple moving averages. That's the red and blue lines. Those are 629 and 638. It has to get back above those levels to head higher. It needs to bounce off that 100-day simple moving average here at 532. That is the next key level to hold. If it fails to hold that level, then the candles can work in the bands. Notice today's black candle is floating above the upper Bollinger Band. The upper Bollinger Band is down here at 469. So you could see the candles, if the 100-day simple moving average fails to break, work back into the bands down to this 50-day simple moving average at 407 and the EMA 4 at 431. Notice there was a gap here. This is a very odd chart. Because there was hardly any trading. So yeah, keep in mind too when it's a super low volume stock, when there's no trading at all, and then all of a sudden you have giant volume. These companies use this to dump shares, and so you don't want to be a victim. You want to get out as quick as possible. Notice here on the AMRH 15-minute chart that all the magic happened in the first 15 minutes of the day. Notice the long upper wick. Okay, so this is what we call the climax spike. You have the giant volume spike, the big pullback from high of day. That this candle was forming above the upper Bollinger Band. If you didn't get out on this candle, the red candle here was your signal. The red candle that followed. The candles were working into the bands. Notice how they never made new highs. They kept making lower lows and lower highs, and so this was in a downtrend. And so yeah, the middle Bollinger Band broke. Now it's headed for the 50 simple moving average at 522. That is the key level to hold. As long as candles are riding EMA4 at 604 resistance lower, it signals the downtrend is intact and more downside risk. It has to get back above the middle Bollinger Band at 662 to get a new uptrend going. Okay, let's look at NVAX. Okay, so yeah, the stock was super strong today. It was strong into the close. Closed up nearly 60%. Check out this white candle that just busted through the top of the upper Bollinger Band, just right through the top of this previous, where it had resistance. Notice that there was a top here and then a top here in November. And so, yeah, so July and November, it had topped out around 155. Well, today it busted right through that level, so that was really good to see. Today's candle is well above the upper Bollinger Band. If the candles do work into the bands, EMA4 is down here at 164. You want to see 155 turn into support. There was giant volume behind the move today. Notice parabolic spike on MACD on both time frames. So when a stock's breaking out, you want to look at the weekly chart at a longer time frame to see where the next resistance levels are. And so as you can see here, this has been in basically a sideways channel, besides down here in April where it dropped down in May and it made the bottom in May. But basically it's been in this channel here, and it has an ascending support going, and it's busting through the top of this multi-month, year and a half channel to the upside. And so this is a good move. It's busting out above the top, which is just, it looks like around 160 or so. And so basically it's coming up to the next key resistance level, which is back here in September. And so if it can get above 225, then 273, the 100-week moving average will be the next target. If you see it stall out at 225, then the candles could work back into the bands, and then you want to see EMA4 down here at 162, and the top of this channel turn into support. You want this red line to turn into a green line. It has a nice uptrend going. It's on a multi-week run right now on a nice volume spike. So yeah, we just have to see if it can break through 225 resistance. Okay, let's look at LEDS. Okay, yeah, this stock made a really sweet move today. Congrats, everybody. Closed up 71%. It was up at much higher levels earlier in the day. You can see where it hit. It ran up here to this November open. Close to the open here and to the previous where it spiked back here on the what was it, the 15th and 16th of November. And so that's where the upper wick on today's candle, it hit that zone and pulled back, and then it came down and it failed to close above the closing price on the 16th, and so it has to get above that 7 resistance zone to head higher. Now in after hours trading, it's down to 495. The candles did work their way back into the bands. EMA4 is down here at 409, so it's just below that level. It would put it down here testing EMA at 466, and so the closing price here on January 4th, that is the key level to hold. It has to keep this uptrend going. If you see it drop down to the middle Bollinger Band at 412 and that 50-day simple moving average at 396 and drop below, that's going to signal, be a big red flag, obviously. Yeah, so they had a conference call after hours today, and so the golden rule is not to hold a penny stock into a conference call. LEDS it is a penny stock. I mean, it's hit above $7 a few times here, but the general rule is if a stock's below $7, definitely below $5, it's considered a penny stock. And holding any penny stock into a conference call is a very risky situation. So always keep that in mind. Our rule is to go to the sidelines, and as you can see, a lot of people it did the same thing. You know, there was a climax spike here at 11:30. You could see the long upper wick on the 11:30 candle, followed by a red candle. This is where, you know, you wanted to lock in gains, and then it failed to make the new high. You know, it broke below EMA 4 here, and that was your red flag, and then it broke below EMA 4 again, and so those were signals the chart was cooling down. It did bounce off of EMA 13, and it broke back above this channel at 215, but when it came back up to the 725 high close resistance zone, it failed to close above that level, and that was your signal. That was the sign of weakness. If you were thinking that maybe I was going to keep riding this thing out, and so you had another chance to get out here, and then it came down here and it was testing the middle Bollinger Band in the end. I mean, it's just it's one of those rules, like with the black candle. More times than not, you're going to be glad that you weren't holding before a penny stock conference call. Okay, so yeah, so let's look here. Oh yeah, and basically for support, if it's at 495, so that's going to put it down here at the 50 simple moving average at 503, and so it needs to hold that level. You know, it's down here at the 100 simple moving average at 496. Many times if a stock does come all the way down and hits the 300 simple moving average on the 15-minute chart, that's usually a good entry point for a technical bounce play. So keep that in mind if it hits 426. Okay, let's look at HMNY. Okay, so that is up 28% today, so congrats everybody. It had the big gap up open. You know, the thing about this chart is notice that our RSI is at 56, so it does have more room to run until that 70 overbought level. You know, it's been having a hard time, you know, getting up to 70. We'll see if it can stay above 50. It has to stay above 50 now that's above that level to show that the chart is healthy. It had been under 50 for multiple weeks. You have Fasto back above 80. There is a bullish crossover here on ADX. You can see the green line plus DI cross the minus DI, the red line to the upside. So that's a signal the bulls are heating up, starting to take control. If you look back here, okay, so the chart is a little complicated. There's a few gaps in the chart. So back here on the 11th, there was a gap up open that created this small gap. And then on the 13th, there was a gap down open, and that created a big gap. So for the little gap, the bottom of the gap is the top of this candle, the high of day on the 11th, and then on the 12th, the low of day is the top of actually both gaps. So this gap and this gap, and then this gap here, for the 13th, the top of the gap is down here on the bottom of the gap is the top of this candle down here. Okay, and so if that wasn't confusing enough, there was a gap up open today. And so now there's a gap on the chart between high of day yesterday and low of day today. So a lot of gaps in the chart. This little gap here is filled. You can see the candle filled that space. But this big gap here, now that there was a gap up open, I mean, there's still a space in the chart. So this is really, you know, this is a chart. It has the potential to do, you know, an island cluster. You know, there's just a lot of, you know, there's another gap here. You know, it could be an island reversal pattern. If it could launch off of the 50 and the 100 here, if it could hold there, if it doesn't fill the gap and it holds, you know, that could be a good bullish scenario, and it stays. See, the thing is, it's hitting also the green and the gold lines here, and that's the 50 and the 100-day simple moving average. So this is a major resistance zone. It's the top of two gaps, and it's the two major moving averages, and then you also have the upper Bollinger Band just below at 902. So the big thing is if it can get above 969 and stay above that level, that's going to be your signal that wants to head higher. Then it could run up here to 15 and get back up to this November 28th level, you know, so which was not very long ago. It was just at 15. So that's the upside potential. The downside risk is it comes down here and it fills the gap below. So if it fails to get above that 50 and 100-day simple moving average, the candles could come back into the bands. Notice today's real candle body is above the upper Bollinger Band, and it could fill that gap. And if it did start working its way back in, then you look for a gap fill, and then the reload would be the middle Bollinger Band at 687. So if you're on the sidelines, the two plays are either a load off the middle Bollinger Band if it pulls back, or you load on the break above 10, a break above resistance. So you want to be sure that it's ready to go, or you want to wait for that dip. You know, so sometimes it's better just to have patience and wait than it is to jump in early, or it's better to lock in gains if there's uncertainty. You know, sometimes maybe, you know, you just want to take half off the table. It just all depends. It's all about mitigating risk. You know, the whole key is just trying to stay in the game. Yeah, you never go broke if you take a profit. So here's DPW. So this chart, okay, is heating up. It closed up 37% today. It has some potential here if it can get above EMA 13. So it's been in this downtrend, riding EMA 4 resistance lower on the daily chart. Notice that it closed below EMA 4 here, and then you know, the candles just started riding the pink line lower. And notice how every single close has been below the pink line. Well, there was a little gap here. I had it on the chart before it took it away, but yeah, there's a little gap here, and so this gap filled today, and so yeah, and then there's also a gap up here on the chart, and so the reason why we put the gaps on is because they become key resistance levels and also key catalysts, and then yeah, the thing is that there was a gap over here that filled. And so what happened is, what looks like happened is the share price came back and it filled this gap. I know it's hard to read with all the lines. Sorry about that. It filled the gap between these two candles, the space, this candle, and that was a catalyst to bounce. And now the share price is, and when it bounced, it filled the gap between low of day on Monday and high of day yesterday. And so so the gap from December filled, and the gap from yesterday filled, and then it also got back above the 50-day simple moving average at 239. It has to stay above that level. That's the stop loss level. That or EMA 4, however you want to play it. But those two levels need to hold for this to remain in play. If you're going to be long, if it closes below both those levels, then you want to be on the sidelines or you want to be short, because it would likely drop down to the 100-day simple moving average at 148. You wouldn't want to ride long between 250 and $1.50. That would be insane. But if it holds, it stays above 257 here, stays above that EMA 4, and it can break above EMA 8 at 287, and it can break above EMA 13 at 314, then it could get something happening. We really wanted to see it close above that orange line today. That's what we were looking for. It did pull back. People were locking in gains before the close. People aren't trusting the bounce. People wanted to lock them in. But if it can get above that 314 level, then it could get up to that middle Bollinger Band at 394, and it has to turn the middle Bollinger Band into support to get a new uptrend going. If you get the middle Bollinger Band, then we'll be talking about possibly filling this gap back here to 460. Okay, let's look at grow here. Okay, so GROW. So if you look here, it has a nice. So what's happening is a lot of these crypto stocks, blockchain related stocks are starting to bounce. They're trying to, and so at least they did today. And so this is actually it's in a downtrend. It's below the middle Bollinger Band, and so what it needs to do is get above the middle Bollinger Band at 492. And so if it can get above that level and close above and turn 5 into support, that'll be a signal that it wants to head higher. If that 5 level still turns into resistance, you know, it would signal that it's still consolidating. Keep an eye on it. It closed back above the EMAs 4, 8, and 13 today. You know, it's been holding this 50-day simple moving average that's been rising down here at 404. You know, it's trying to break above resistance. If it can and get a close above, then it could possibly get that uptrend going again. So keep an eye on it. If you look at the monthly chart here, you can see the potential. It was back here at much higher levels in 2007. Look at the big volume back in 2007, and so it was up here. It was in a long downtrend, and then just this, you know, it just started heating up here, and you know, this year, and it broke above resistance above the top of this channel and above the 50-week moving average, and then it got above the 100-week moving average, and now it's hitting the 200 or the 200-month. This is a monthly chart, and so now it's hitting the 200-month moving average, which is currently at 478. And so it needs to close above that level. That's the big level to break in order to head higher. If it fails to get above that level, that's going to signal a temporary top. So if you see a monthly close above the 200-month moving average at 478, that should be the big bold signal that this wants to keep pushing higher. So it has a really nice uptrend going. It's pushing really hard. Notice the big volume. The last time it had big volume like this was way back in 2007. And so notice how that had continued for multiple months in a row. So yeah, and this month has been starting off with some good volume. So we'll see if that can continue. So keep an eye on it. Let's look at SSC. So SSC is heating up as well. It pulled back. All the crypto plays were hotter in the morning, and then people were locking in gains towards the close. But as you can see here, it closed above the dotted purple line, which is the middle Bollinger Band. And so that's the big level to hold. That's 456. If it can stay above that level, then that'll signal that this uptrend is still intact. After closing above the upper Bollinger Band, it retraced back to the middle Bollinger Band. It's held that zone, and now it's back above EMAs 4, 8, and 13 and the middle Bollinger Band. If it stays above those levels, then the uptrend's intact, and then you're looking at a run back up to 6. You want to see this high close here on the 26, a close above that, so that $6 level. Now, if it turns into resistance, then you could see a drop down to the 50-day simple moving average. So we're looking for the middle Bollinger Band to hold and a push back up to 6. Okay, let's look at RIOT. Okay, so keep an eye on RIOT. They've been walking it down. Notice how the volume's been lighter. Like today, there was super light volume. Notice how it was the lightest volume in a very long time. I mean, you have to go way back here. Notice the last time volume was this low was right here, and that was before it broke out. And so when volume gets really light like this, what we look for is a bullish volume spike and a push through resistance. So this needs some kind of catalyst. They need some news. They need some kind of spark to get this thing through resistance. But if it can get through EMA 13 at 25.30, 25 is the big level to break, then it can get moving. Once it's back above the middle Bollinger Band at 27.80, this dotted purple line, then it could get a new uptrend going. Right now it's in a downtrend, and it's just riding resistance lower. You can see here it's in a very tight channel, and they're just walking it down, and so they're milking out all the weak hands. And so we'll once the volume spike comes, that'll be your signal. If it's riding EMA 4 resistance lower, you don't want to be long, because that you want to wait for the break above. It needs to close above to signal that it's heating up. Okay, otherwise it'll signal more downside risk. If you look at the 15-minute chart, this is what looks interesting. It came down here on the 4th, and it hit a bottom. And so you can see this 22 to 23 support zone, and then it came back down on the 8th. It hit the same zone and bounced, and then it came back down today, and it was pretty much trading in that zone the entire day, and trading at the lower end, at the close. And so this is a huge support level. It really needs to hold this level. If it breaks, that's when you're going to see the drop down to the 50-day simple moving average, and that's going to be the target. Fail to hold 22, and then you're shooting for 18 down here. Notice there is an unfilled gap. Since we're talking about gaps, there's a gap down here, and so if it came down to 16, it would fill that gap. So you never know. The market makers could be shooting for a drop down to that 50-day simple moving average and gap fill. So it's going to be all about holding this 22. If you see a RIOT drop below 22, it's going to be a major red flag. So keep that in mind. Okay, so one to keep an eye on is MARA. This was really hot, and then it wasn't. So it's just been kind of, I think it's just off of everybody's radar now. And so I don't even know what the story is going on with this thing right now, but it has the super low volume that we were just talking about. Look how they walked it down on very low volume, and they walked it right down to this 300-day simple moving average and the 50-day simple moving average, basically 363. It needs to hold that level. If it can hold that level, then it could possibly get a reversal. Today it was above EMA 4. It closed just above that level at 395. If it can stay above that level, then break above EMA 13 at 426, then it could heat up. And then what you want to see is a break back above that middle Bollinger Band at 479. If it drops below the 360 support level, then you could see a drop down here to 259. Once again, it's the gaps. And so if you look over here, there's a gap on the chart, a space on the chart between two candles, between a high of day and a low of day. And so the gaps become targets. And so they could be shooting for a drop down to that 100-day simple moving average to fill the gap. Keep in mind, many times a gap fill is a catalyst for a bounce, okay, or for a reversal. Okay, let's look for TEUM. Okay, so it's bouncing today as well. Notice that it had the 4 red candles in a row. So it's still in an uptrend. It's above the middle Bollinger Band, which is good. It bounced off of EMA 13, the orange line at 230. That's good as well. It needs to break EMA 4 at 252. That's the pink line. It's right at 251. Notice how they closed it right below that level. If they can close it, if they can close above, then that'll be a signal it wants to head higher. If it fails to break that 250 resistance zone, then you could see it drop down to that middle Bollinger Band. So the two levels are above 250, signals heads higher. Then we're looking at a test of this $3 close, the high close. If it fails to hold 230, that's going to be the downside risk, and you're going to see the 190s tested in the middle Bollinger Band. Okay, and then let's look at RMGN. So to shift gears a little bit, yeah, just check this chart out. This is pretty interesting. It closed above the 50-day simple moving average today. That is the green line there at 97. So as long as 97 holds, that is signaling that the stock is in play. Keep in mind, very low average daily volume. Okay, so that's always a red flag. Yeah. So the volume spikes have been accompanied with long upper wicks on the candles. So that's a sign that they have been selling shares into the little spikes. So in order for this to be in play, for it to remain in play, it has to stay above the 50-day simple moving average. If it drops below, you just don't want to have anything to do with it. But hey, if it can stay above a dollar, if you can hold the dollar here and turn that into support, and if the volume doesn't leave and it's just like totally no volume at all, if it can keep some volume going, it could possibly head up to that 100-day simple moving average. So yeah, keep an eye on it. And then another one to take a look at is this will be the last one. This is over-the-counter stock, SWRM. They had over here on the right, you can see they launched a Bitcoin tracking app, BitChart, today. And it had a nice bounce off of the 50-day simple moving average. That is the green line right here. And so it closed above EMAs 4, 8, and 13. And what we're looking for is a break above this 1050 resistance zone. So, if it can get above 1050, that should be the signal it wants to head higher. If it hits 1050 and fails to break, it could signal a temporary top. But yeah, keep an eye on it. It had a nice move today. It was up 90%. We'll see if it can continue tomorrow. Okay, yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. And then please check out the chat. I'll post the link below the YouTube video. Okay, thank you very much.